Hello friends, today's topic is deductions allowable under section 57 while computing income from other sources. Under this we will be discussing the dividend income earned, what are the corresponding expenditure allowed, employees contribution to provident fund, what are the deductions allowed, whether the contribution to PF is allowed as deduction or not, when it is allowed as deduction, then interest on compensation or enhanced compensation 50% deduction is allowed, family pension deduction where family members are receiving the pension amount, then what is the deduction amount available to the SSC, and miscellaneous provisions will be discussed under section 57. So friends, deductions allowable, it is similar to section 36(1) or 37 of the profit and gains from business or profession. So under section 57, there are specific heads mentioned wherein if certain conditions are satisfied, then deductions under section 57 will be eligible, and this will be corresponding to the income which is taxed under the head income from other sources. So if an income is getting taxed under the head income from other sources, then corresponding deduction will be eligible to the SSC under section 57. Correct? So first is dividend income. Dividend income which is taxable under the head income from other sources. Commission or brokerage paid by the SSC for earning that particular dividend income will be allowed as deduction against such a dividend income which is taxable. If dividend income is exempt under section 1034, basically you can link it with section 1150, wherein a dividend distribution tax is being paid by the company. So where dividend distribution tax is paid by the company, in such a case the income is not taxed again in the hands of shareholder, and accordingly there is a specific exemption in the hands of shareholder under section 1034. Correct? So since the dividend income is exempt, you won't get any corresponding deduction of commission or brokerage paid. Only if the dividend income is offered to tax under the head income from other sources, then only deduction under section 57 will be allowed to the SSC. Correct? Then second is employees contribution to provident fund. As we have read that as per section 2 clause 24, then the employees contribution will be taxable in the hands of employer SSC if the same is not paid within the due date of filing return of income. So 224 is to be read with section 36(2) for income, and for deduction section 36(1)(4), 36(1)(5)(4) is to be read with along with section 57 for the purpose of deduction of employees contribution in the hands of the employer SSC. Meaning only if the employee's contribution is offered to taxed as income, then only a deduction will be offered under section 57, provided the contribution is made within due date of the respective act. Let's read out on the screen both the subsections, and thereafter we can move on to the next cut start, and thereafter we can move on to the next subsections on your screen. In the case of dividends other than dividends referred to in section 1150 or interest on securities, so along with dividends we have interest on securities as well, any reasonable sum paid by way of commission or remuneration to a banker or any other person for the purpose of realizing such dividend or interest on behalf of the SSC. Correct? So commission or remuneration is being paid to any person, to any banker, to any person. So commission or remuneration has been incurred by the SSC for earning the dividend income or earning the interest income, and accordingly the same will be allowed as deduction to the SSC under section 57. employees' contribution to any provident fund, etc. in terms of 22410. A deduction will be allowed in accordance with the provisions of 3615A to the extent the contribution is remitted before the due date under the respective act. Correct? Now, third one is expenditure incurred while earning income from letting out on hire the machinery, plant, furniture, or building. It could be with building, it could be without building. So, friends, you have income. The SSC has income from letting out on hire machinery, plant, or furniture with or without building, and he has expenses in the form of current repairs, in the form of premium paid for insurance of the machinery, for insurance of the plant or furniture, or insurance of building, and also you can say, since they are fixed assets, expenditure in the form of deduction in the form of normal depreciation allowance. So this expenses will be allowed to the SSC under section 57. Since the income from letting out on hire is being taxed under subsection 2 of section 56, since the income is taxable under the head income from other sources, any expenses related to repairs, insurance premium, depreciation will be allowed to the SSC under section 57. This is similar to provisions of section 30, 31, 32 of the profit and gains from business or profession. Even section 38 is to be read along with these sections. Right? On your screen, where the income to be charged under this head is from letting on hire of machinery, plant and furniture with or without building. The following items of deductions are allowable in the computation of such income: amount paid on account of current repairs to machinery, plant or furniture, the amount paid by way of premium in respect of insurance against risk of damage or destruction of the machinery, plant or furniture, the normal depreciation allowance in respect of machinery, plant or furniture due thereon. So friends, current repairs, section 30, 31, premium paid, and normal depreciation, section 32, to be read along with section 38, wherein an asset is partly used for business or profession and partly for other purposes. Correct? So hence point number 3 was related to income from letting on hire of machinery, plant and furniture. Point number 4 is related to family pension. The family pension is received by the family members in the event of death of the employee, and a standard deduction is available to the person who is receiving the family pension. Deduction is 33.3% or 15,000, whichever is lower. So this will be the deduction amount available. And also at times the family pension amount will be exempt entirely. 100% deduction will be allowed, wherein the family pension is received by family members of a military person who, while performing operational duties, was declared dead. Correct? So in case of military forces, family pension received by the family members of the military personnel will be exempt. Also, if a person has been honored by the president, and accordingly family pension received by such person by family members will be exempt. For example, here you can see Paramveer Chakra or Veer Chakra. The person is honored from Paramveer Chakra, Veer Chakra by the President of India. In such a case, family pension received will be exempt entirely. Correct? On your screen, in the case of income in the nature of family pension, a deduction of the sum equal to 33.1 divided by 3% of such income, or 15,000, whichever is less, is allowable, right? 33.3% or 15,000, whichever is less. For the purpose of deduction, family pension means a regular monthly amount payable by the employer to a person belonging to the family of an employee in the event of death of the employee. Correct? Then exemption in respect of family, in which 100% deduction will be allowed. A family pension received by the widow or children or nominated heirs of a member of the armed forces, including paramilitary forces of the Union, where the death of such member has occurred in the course of operational duties in specified circumstances, would however be exempt under section 1090. So there would be no question of standard deduction under section 57, since the entire family pension income is exempt under clause 19 of section 10. Also, family pension received by any member of family of an individual who has been in the service of central or state government and has been awarded Paramvir Chakra or Veer Chakra or Veer Chakra or other notified gallantry awards would be exempt under clause 18 of section 10. Correct? So this was regarding family pension received, wherein a standard deduction is allowed, and in certain circumstances 100% deduction will be allowed to the SSC, meaning the family pension is entirely exempt under clause 19 of section 10 under subclause 2 of clause 18 of section 10. Any other expenditure not being in the nature of capital expenditure laid out or expended wholly and exclusively for the purpose of making or earning such income. So a residual category for deduction as well, wherein the expenditure should not be capital in nature, and you can say it should not be personal in nature as well, and it should have been incurred for the purpose of earning income, which is taxed under the head income from other sources. Correct? Not capital in nature, exclusively for earning such an income, which is taxable under the head income from other sources. And the last category, friends, interest on compensation or enhanced compensation, which is taxable under subsection 2 of section 56, wherein we had studied that it will be taxed on receipt basis, irrespective of the method of accounting regularly employed by the SSC. In there, we had also discussed a deduction of 50% will be allowed, a standard deduction of 50% will be allowed to the SSC, right? So in that case, this has been reiterated over here under section 57. On your screen, in case of income by way of compensation, enhanced compensation received chargeable to tax under clause 8 of subsection 2 of section 56, deduction of 50% of such income will be allowed. No deduction would be allowable under any other clause of section 57 in respect of such income. The apex court held in the case of CIT versus Rajendra Prasad Moody that in order to claim deduction under section 57 in respect of any expenditure, it is not necessary that income should in fact have been earned as a result of the expenditure. Very important. Clause 6, the pointer 6 related to interest on enhanced compensation, we have already discussed. It has already been concluded. Now from here, there is a ruling related to the income which is exempt and whether any deduction on such an income can be claimed or not. Whether it is necessary that an income should be earned in order to claim deduction under section 57. Let's take two examples wherein dividend income received by the SSC, however, the same is exempt under section 1034 because dividend distribution tax has been paid by the company. Accordingly, it has been specifically mentioned that dividend income which is exempt, on such dividend income, if any expenditure was incurred by the SSC, it won't be allowed as deduction under section 57. Correct? Now, let's say the dividend income that is supposed to be received by the SSC is not exempt under 1034 because dividend distribution tax is not being paid by the company. Okay. Now, dividend income is taxable in the hands of the SSC. However, as the company is running into losses, dividend income is not declared at all by the company. So here in the second scenario, we can observe that though dividend income, ideally if it would have been declared, then it would haven't been taxable. It wasn't taxable in the hands of the SSC. Sorry, it was taxable in the hands of the SSC, it wasn't exempt under section 1034, correct? However, the company is not able to declare any dividend because year on year the company is running into losses. So in the current previous year, company has decided that they are no more declaring any dividend for this particular year. However, SSC has incurred certain expenses for earning dividend income, commission or brokerage to banker or any other person, right? So in such a scenario where the expenditure has been incurred by the SSC, however, there is no dividend income as such. Dividend income, if declared, was taxable in the hands of the SSC, but since it is not declared, the income is nil. However, there are losses. However, there are deduction in the form of commission or brokerage paid for earning dividend income. There are deduction available. So whether such deduction will be eligible for deduction under section 57 or not has been answered by Apex Court in the case of CIT versus Rajendra Prasad Modi, correct? In which case it was held that such deduction cannot be denied to the SSC. They held that the Apex Court held that it is not necessary that dividend income should mandatorily be earned by the SSC. It should mandatorily be reflecting in the profit and loss account. It is not necessary. If the income was taxable and deduction thereon has been incurred, then deduction under section 57 cannot be denied to the SSC. This was held by the Supreme Court, by the Apex Court, in the case of Rajendra Prasad Modi, 1978. I will read it out on your screen. The Apex Court held in the case of CIT versus Rajendra Prasad Modi, 1978, 115 ITR 519, that in order to claim deduction under section 57 in respect of any expenditure, it is not necessary that income should in fact have been earned as a result of the expenditure. So in a second scenario, we can observe this, that it is not necessary that income should in fact be earned by the SSC. If SSC has incurred expenditure and things are beyond his control, that income will ideally be earned. For example, the dividend income. Because of losses, the company are not able to declare the dividend. So this is beyond the control of the SSC. However, he has incurred expenditure for earning dividend income. So such deduction cannot be denied to the SSC as per the Apex Court. In this view of the matter, the court held that interest on money borrowed for investment in shares, which had not yielded any taxable dividend, was admissible as a deduction under section 57 under the head income from other sources. So here expenditure is in the form of interest on money borrowed for investment in shares. So in this particular case, in the case of CIT versus Rajendra Prasad Modi, the facts of the case were that amount was borrowed for paying interest, for earning dividend income. I mean, you have invested in shares by borrowing loan from somewhere else and you are expecting dividend in the form of investment in shares. However, the company hasn't declared any dividend and accordingly any interest paid, any expenses incurred for loan borrowed from borrowing of loan, any expenditure which has been incurred by the SEC will be allowed as deduction under section 57. This was held by Apex Court in the case of CIT versus Rajendra Prasad Modi. So friends, this concludes section 57. Thank you.